On today's episode, we are going to take a look at Zoom. They just reported earnings. This is ticker CM. They are up 22% after hours, closer to 23%, up $73. And at the beginning of the day, they were also up $25, up 8% before reported earnings. So in the past 24 hours, this company has gone up by 31%, almost increasing its total market cap value by 33%. So today's episode, we're going to do the following. First, we're going to take a quick look at the earnings overview. After that, we're going to take a look at their future and past growth. Then we're going to take a look at some of their earnings highlights, followed by a quick look at their balance sheet. Make sure that they are a healthy company. And at the end, I'm just going to give my thoughts on the company. If I'm buying, if I'm selling, what am I doing with Zoom? And like always, if you are new to my channel, if you are a long-term investor, and if you like to learn about growth stocks, make sure to hit that subscribe button. And to all my returning viewers, thank you so much for all the support. Like always, if you guys ever need to get in contact with me, YouTube comments, Twitter, my Discord channel, Twitch, or my weekly newsletter. You can all find that information at josenaharo.com, so make sure to check it out. But remember, all this information is free. I am by no means a professional, so none of this should be taken as advice. Make sure to talk to a financial advisor before doing any form of financial movements. All right, so like I mentioned, this is ticker Zoom. They just reported earnings today, August 31st. One of the few companies that most companies, I want to say, don't report on a Monday, but Zoom is not most normal company. This one went up after hours, like I said, 23%, and right now is sitting close to that $400 mark. Just at the beginning of the year, this was sitting at about $70. So in a matter of 8 months, this has returned close to 6% to investors, close to 6 times the original investment. That to me is insane. And we're going to take a look at today's earnings to why this is happening. And before we continue, today's episode is sponsored by my great friends at 7 Investing, where every month they provide their 7 top stock recommendations for only $17 a month. September is coming up and their recommendations should be up tomorrow. So make sure to check them out. They do a lot of great work. All the information will be down on my pinned comment and on the description. Make sure to click that link to check them out. All right, so let's take a quick look at the overview of their earnings. So Zoom reported non-GAAP earnings per share of 92 cents, which beat expectations by 47 cents. They reported GAAP earnings per share of 63 cents and beats by 26 cents. So we can see Zoom is already a profitable company when we take a look at non-GAAP earnings per share and GAAP earnings per share. This company's revenue was $663 million, and this is up 355% compared to the same time last year. That to me is insane. 355% gain. That's over quadruple the rate that it was last year. And that to me is showing me why this company is up big. Right now, Zoom currently has a market cap of $91 billion, not counting the gain that it had after hours. So after hours, this company will now be sitting at closer to $111 billion market cap. And I can see a lot of people complaining of, hey, Jose, this company has a market cap of $111 billion. But it only makes revenue of $663 million per quarter. What's going on with that? And we're seeing right now what investors are paying for, it seems, is this heavy growth company. Imagine growing over 4 times your revenue compared to the same time last year. I guess investors are still bullish that this company will continue to grow and grow as the years progress. And for those that don't know, Zoom Video. I'm pretty sure most of you guys know, but it deals with overall online communication, online meeting styles. And right now, due to the whole COVID-19, a lot of companies have been moving to Zoom Video, and we can see this, right? When they have this amount of revenue, it means they are increasing their overall customers. So more people are paying to use them. And at the matter, based on just my job experience right now, it seems going back to work as a full-time schedule is gonna take some time. So Zoom is still seems to go strong for the upcoming years, or at least for the upcoming quarters, maybe not years. All right, so we saw it was up almost 4 times its year to year. So, but let's take a look at what analysts expect this company to grow within the upcoming years. So within the upcoming years, for the next 3 years, analysts expect that Zoom will grow at an annual revenue growth of 23.9% on average annually for the next 3 years. Right? Does that mean every year will be 24%? Maybe one year might be 50%. Maybe one year might be 30%, and maybe one year might be 10%. The math might be right, but on average within those 3 years annually, it'll be closer to 24%. To me, I'm honestly gonna say I think this is underestimating Zoom right now. And let me say this: I at the moment do not have a position on Zoom, so it's not like I'm trying to feed this ultra bullish ego right now. But based on the numbers we saw this quarter, which were 355% compared to the same time last year, revenue growth. Numbers I remember last quarter was 144%. To me, I think the annual revenue growth for the company's next 3 years is going to be far higher than this what analysts are expecting. Next, let's take a look at earnings growth. This company is expected to grow its earnings at 37.6%, which is faster than the market and faster than the industry on average annually for the next 3 years. And one of the great things right now about Zoom is it is a profitable company. It's already profitable. We can see its earnings this quarter. And let me zoom in for you guys a bit. Earnings this quarter, GAAP earnings per share were 63 cents. And one more thing I want to share is Eric Yuan is the CEO and is the founder and still owns a majority of this company. I mean, it's not the majority. It's the number one shareholder of this company, owning 15.45%. It's insane, right? This is already a company that's worth over $100 billion, and Eric owns still over 15%. All right, we were taking a look at its expected future growth, but let's take a look at the quarterly past growth that Zoom has seen in the past. So like I mentioned, this quarter was 355%. Last quarter, it was 169%. The quarter before that was 78%. The one before that was 85%. The one before that was 96%, and the one before that was 103%. So this is a strong growth company. In the past 5-6 quarters, it has not grown any slower than 78%. And that's insane, right? That to me is the main reason I do believe analysts right now, they're not. This number that they gave of the forecasted revenue growth is, to me, underestimating the company and what type of growth they are going to see in the upcoming years. Another thing I want to take a look at is this company's historical gross margins and profit margins. And this is the story of a perfect growth stock, right? In a perfect growth stock, normally you start off with making zero money or being negative in profitable margins. As the years progress, we can see in 2016, this company's profit margins were negative 23%. In 2017, they were still negative, but they increased a bit, so they were negative 5%. In 2018, they were kind of flat, sitting at 0%. And look, 2019 was the first year they became profitable at 3.5%. And we can see this is the story of a perfect growth story, and this is what investors pay for. Originally, at the beginning, it might be a company that's not making any money, but as things progress, as things continue to do well, they will eventually hit profit margins positive. And next year after that, we will hopefully continue to see that increase in profit margins. We can see, right, Zoom is in a beast when it comes to gross margins. Since it's mainly a software company, they usually have strong gross margins, right? Because once they create that Zoom software, there's only an initial cost. After that initial cost, there might be some research and development that brings down the cost. But the overall beginning infrastructure is a one-time cost, so gross margins tend to be lower than what's normally expected for other companies outside the software business. All right, so we already took a look at the highlights. We took a look at the past and future growth. Now let's take a look at some highlights from this earning. The first thing they did is they increased their guidance for the upcoming quarter and for the full year. For the quarter two, they are expecting revenue of $685 to $690 million. And this is way above expectations. Analysts expected only about $492 million. Again, this is not only did they beat earnings, they are also destroying the guidance compared to what analysts expected. And I think these two things are the one that's really causing Zoom stock price to go up. Earnings per share they are expected to be 73 cents to 74 cents, and this is more double the expected by analysts, which was 35 cents. So this company is expecting to keep more money. This is, to me, it's honestly, I am not in Zoom, but to see this kind of earnings, it's impressive. They are destroying revenue growth. They are destroying expectations based on analysts for the upcoming quarter and for the full year. For the full year, they are raising their guidance to about $2.37 to $2.39 billion for the end of the year. That's an increase of about 281 to 284%. Almost a quad. They're almost increasing their guidance. They're almost increasing revenue by quadruple its size compared to same time last year. That to me is insane. And that is way above the estimation what analysts expected, which was $1.81 billion. They expect to make about $2.40 to $2.47, and this is better than expectations, which were $1.29. Let's take a quick look at some more of their highlights. The number of customers contributing more than $100,000 in the past 12 months have gone up by 112%. So they're seeing, not only are they seeing an increase in revenue, but the amount of customers that are providing strong amount of revenues per year is also up, almost over double the size of what it was last year. So they've increased double the customers that are paying over $100,000 a year. That, I mean, what else can you ask for? And approximately they have about 370,000 customers with more than 10 employees. And that's up over 458%. Close to over 5 times what it was last year. All right, next what I want to take a look is just at this company's balance sheet to see how things are growing within the business. Are they financially stable right now? We know they are making money and we know they are increasing their revenue. But how are they doing in the bank? Is everything going well there? So right now we're going to be comparing this quarter, which ended July 31st of 2020, and we're going to compare it to January 31st of 2020. So that was about 6 months ago. That was the end of their 2019 year. So at the beginning of their fiscal year, which was January 31st of 2020, this company had about $283 million in quick cash, in cash and cash equivalents. Now they have over 750, so an increase of close to $500 million in cash. Next, let's take a look at marketable securities. 2 quarters ago, so 6 months ago, they had about $572 million in marketable securities. Now they're sitting at 732, so an increase, not close, but I'm just gonna go close to $200 million. So overall, they've increased their cash and cash equivalents and marketable, any form of quick cash, which is their cash and cash equivalents plus marketable securities, by almost $700 million. And that to me is pretty damn impressive, if I may say so. Their total current assets have increased by about $1.2 billion. And again, most of it is coming from the increase in quick cash, but they're also seeing another increase in like prepaid expenses. This company has prepaid some of their bills already. To me, the biggest changes is that cash and cash equivalents and marketable securities. Now let's take a look at total assets. Total assets right now are sitting at about $2.6 billion compared to $1.3 billion last 2 quarters ago. So their total assets have increased by about $1.3 billion. We can see most of that is coming from total current assets, and most of that is coming from that cash equivalents and that marketable securities. To me, there's not anything else I really want to talk about with their assets. I just wanted to show you guys that this company has a lot of cash and they're growing. Now what I want to take a look at is look at their total liabilities. So total liabilities, if you're just looking at that number, you're going to think it's pretty scary. 2 quarters ago, they had about $450 million of total liabilities. Now they have $1.4 billion. So they increased their total liabilities by about $1 billion. You might be like, Jose, that is insane. What is this company doing that's making it go up so much? And the biggest issue right now, and I wouldn't even call it an issue, is this company's deferred revenue has increased by $500 million. And if you guys, deferred revenue is to me a fake liability. The best way to explain this, again, if you have been watching my show for a long time, you know what I'm going to do this. Deferred revenue. If you, for example, you have Netflix, you pay Netflix for 12 months. You pay them automatically for the 12 months, but you've only used 2 months of Netflix. Netflix still owes you 10 months of content. They still owe you 10 months of service. That 10 months of service, even though they collected the revenue for it, it's considered deferred revenue because they have yet to provide you the service. So this is just customers paying a subscription base from them, and it has increased by $500 million compared to the same time last year. So to me, this is a fake liability because Zoom is going to provide them with that service. So in reality, this total liabilities is about $700 million only. And that $700 million, this company can pretty much pay it off with cash and cash equivalents and still have $700 million of some form of quick cash available. So this is a very, very strong balance sheet. All right, so now my thoughts. First, this was an amazing earnings. This is probably one of the greatest earnings I have ever seen in my life. And I take a look at a lot of reports and a lot of companies on a monthly, weekly, daily basis. So to say that this is insane, Zoom, the amount of revenue growth is growing is insane. Earnings are growing just as fast. It is already profitable. They're seeing no slowdown. They have increased their guidance. And to me, I understand why it is priced the way it is priced. Am I gonna buy right now? To be honest, I'm not. I've been wrong with Zoom, right? To me, Zoom. Right, and this is the great thing about investing. I have been wrong, and I'm willing to say that. Zoom is a company that, even though I've been wrong, it doesn't really affect me. Zoom is a company that, even though I understand the market they're in, I just can't get that excited for this company. And for me to invest in the company, I have to be super duper excited for me to enter. And Zoom, for me, just from the beginning, was never one of those. And I have done plenty of valuations episode on Zoom, and all those valuations mentioned that Zoom has been the cheapest compared to all the other SaaS companies when you take a look at revenue growth, when you take a look at earnings growth. But even with all those numbers showing that, hey, Zoom is cheap, for me, it's just not a company I am willing to invest in. And again, this doesn't mean it's a bearish scenario, and that to me is okay, right? The great thing about this market is you don't have to have every single winner to have a great portfolio. Even if you have a portfolio that only has X amount of strong winners, that can still be bad. Those winners are the ones that are gonna determine if you beat the market. Obviously, if you have every single winner in the stock market, you are a genius. But like I mentioned, the great thing is you don't need every single winner. To me, if I was bullish in Zoom, it wouldn't be let's just say a scenario if I was super bullish in Zoom and I wanted to get in. If I wanted to get in on Zoom, this is how I would play it, and this is not advice. I would just dollar cost average in, which is what I do with any position. Zoom is one of those that I wouldn't jump in all at once. I would probably put like 1% here, 2% here, 3% in, and continue to add on over time to build up a position. And that's how I would play Zoom. So let me know, how are you guys playing Zoom? Are you guys buying right now? Are you guys selling? Are you guys taking those amazing returns? And let me just say this. If I right now was holding Zoom, from earlier on, this 22% day wouldn't make me sell. If for me, fundamentally, it's still growing. This is a crazy growth. So I personally, if I was holding Zoom right now, I'm expecting multi-baggers. So even the 22%, which is amazing, would not shake me off of this company. So that's it for today's episode. I hope you guys enjoy it. Like always, make sure to subscribe, make sure to get the thumbs up, Take care, guys. Have a good night and see you next time.